Record. Hello guys, how are you doing? This week we are going to keep on the same lines of investing, and we are going to start to talk about another form of investing that is a lot in the news and it's on the tip of everybody's tongue and everybody's talking about it. But how much do people really know about it? I don't think that many people actually know about it. It just sounds very nice. And you know that I'm always saying that people like to use what I call point words, right? So like last week when we were talking about investing, I was saying that people like to say, oh, what's the return on investment and those things, because it sounds really nice. Well, with this one, people like to use it. And for this session, we are going to talk about cryptocurrency, right? And the buzz one that everybody loves to say is Bitcoin, right? Bitcoin, it somehow seems to encompass all cryptocurrencies. The moment they're mentioning cryptocurrency, they're saying, oh, are you investing in Bitcoin? Well, it's a little more than that. All right, so I am going to share my screen. And let's head on over. Okay, so cryptocurrency, right? We're going to go ahead, and cryptocurrency can get very technical, but what's the purpose here? The purpose here is to go ahead and essentially build your vocabulary on the various things that increase your investing and your financial literacy. So the various things that you speak about, rather than it just kind of blowing over your head, you're now able to engage in a conversation about it. You're able to do some investment on it. You're also able to go ahead and do more research on it, right? So it is not necessarily a whole deep dive into the full nerd world of what is crypto, right? Because it goes deep. But you need to know what are some of the basics, especially being a beginner investor. If you don't know what is the basics, then how can you truly invest in it, right? So what is cryptocurrency? All right, there's a long thing here, but what it's essentially saying is that cryptocurrency is a virtual currency, right? And virtual currency that is built on a network called blockchain, okay? Blockchain is not Bitcoin. Bitcoin is not blockchain. One is a digital currency. The other one is the platform that the digital currency is built on, right? So Bitcoin was built on blockchain, and all of these cryptocurrencies are digital or virtual currencies, right? My daughter asked one day, hey, how come I never see you with the coin with the B? Because it doesn't exist really. It was just, all of these coins that you're seeing are just created so that you can get a visual sense of them, but they're not real. Nobody is walking with an actual Bitcoin to trade anything. These are all digital currencies. The other thing is that they're very secure, right? They're extremely secure. They're secure because of the blockchain technology, right? Now, is it that only currencies are on the blockchain? No, currencies are built on the blockchain. Blockchain is a platform within itself, and many manufacturers, up to the other day, Louis Vuitton released that they're using blockchain in their process in order to track their records. So blockchain doesn't not only have currencies on there, right? And when we talk a little bit about blockchain, you'll get an understanding of why you can have more things on there than just a currency. Okay, so as it says, it is secured, right? And cryptography, right? So like military grade security, that is the crypto of cryptocurrency. Crypto is short for cryptography, right? And as they say, it makes it almost impossible for you to counterfeit or double spend. And one of the things we're going to talk about when we talk about blockchain is why it's hard for you to double spend it. Lastly, you will see where it says that it is immune from government interference or manipulation, right? It is free from that because of the blockchain. So everything is really, it's not so much the currency, but it is the platform for which that currency is built on, okay? So if you notice, a lot of what I said, it came back to the network. So it is not that Bitcoin by itself is also secure and also fantastic, but how it is built on the blockchain technology is what makes it so good and so fantastic. All right. So let's move on to the next one. Okay, so blockchain, right? What is blockchain, right? Well, blockchain is essentially a type of database, right? And what it does is that it stores information and chains them together. Blockchain. Each block is a record. And so when there's a new record, there is a new block. And each of these blocks are chained together to create essentially like a web, right? Or a net of information, right? So blockchain, they weren't very magical in the way how they came up with the name, right? So as I said, it changed the blocks. Now it changed the blocks in chronological order, right? And what it does is that each block, it maintains it like a ledger. So once a block is created, that's a ledger entry. So today we do a transaction, that's a block. Tomorrow we do a transaction, that's another block. It's going to chain those two together. And you know, the one yesterday is first in line, the one today is second in line. When we do another transaction tomorrow, it's going to be a third block, and all three are going to be chained together. So that is how the whole blockchain really ties in everything. Finally, well, is it finally? It might not be finally. But the other big thing, and this is what made everything take off, is the whole thought of decentralization. You hear it on the news, everyone says, oh, it's decentralized. What it means is all of this information is not stored at a single point of origin. There is no one server that is holding this information, or there is not a single location with a set of servers that is holding this information. What it actually uses is computers not that dissimilar from yours and mine. Think of it this way. I store one block on my computer. Another one of you store another block on your computer. Another person in Moscow has a block on their computer. And all of them through the network are tied in as the chain. So what does that mean? And then it also does redundancy and all of that stuff like a regular server, right? But I'm trying to keep it very simple. What that means is if somebody was to go ahead and try and come in and say, look, I want all of these transactions, they would somehow have to know which computer is holding which block and the sequence in which the blocks are held. Because if you break the sequence, they're not going to read. They have to be in sequence. So if somebody was to say, oh, I'm going to hack these transactions, they would have to hack my transaction, they would have to hack they would have to hack my computer, your computer, the computer in Moscow simultaneously, and somehow know how to fit that information in chronological order to figure out what it is. That is why everybody loves it, right? And that is why they said that governments and those things cannot interfere with it, is because I'm just naming 3 computers, but these is really thousands and thousands of computers around the world that have all of these various blocks and have everything chained, right? So if somebody, that is why people say it is virtually unhackable, right? Because in order for you to hack the blockchain database, you would have to be able to know all of the computers that are hosting the blockchain database, hosting the different nodes, and be able to hit all of those computers in time, right? Before anybody starts locking off and those type of things. So you can just imagine how incredibly difficult that would be, right? I was watching a program where one guy actually said, you could hack it, but the amount of computer power it would take in order to hack up the blockchain, it would be more than the computer power it takes to run the blockchain, right? So it's kind of feasibility hindrance on that one. Okay. And as talked on this last point in the last one, is that the information cannot be altered. You cannot change a block. Once a block is there, and that's kind of like why they call it a block, is once a block is there, it's there for life. That transaction has been made, it cannot be altered, it cannot be deleted, nothing. That block has been created and it will be there for the entire time that the system is running, okay? Now, I say Bitcoin is the father of it all, right? I'm sure there were other coins that were made around the same time as Bitcoin, but they kind of fizzled out, right? The one everyone stood behind was Bitcoin, right? Now, what is Bitcoin? Everybody talks about Bitcoin. Well, nowadays, people are calling it digital gold, right? It was created in 2009. And the only people who really knew about it from 2009 to, let's say, 2018 were the ultra nerds, right? Either the ultra nerds or people who were buying illegal things. It was really underground for a very long period of time, right? And it's just in like the last 2 years, people are like, hey, there's this thing called Bitcoin. It seems pretty cool. Let me get into it, right? So mainstream is very young, but it's been around since 2009, okay? The next thing is that it's a finite resource, okay? Because it's digital does not mean that there is an unlimited amount of it, right? It's a finite. When it was programmed onto the blockchain, it was programmed with a finite number that once all of that number, I can't remember offhand, it's a few million, right? Once all of that has been mined, and we'll talk about mining a little later, once that has been mined, there will be no more Bitcoin, no more new Bitcoin to enter the system. Okay, that's one of the reasons why you're seeing the price of Bitcoin skyrocket. Okay, because it's a finite resource. Once all of them have been mined, whatever is in the system and flowing between traders and what people are holding in their accounts, that's it. There is nothing new to be had. hence why they call it digital gold, right? Gold is a finite resource. The more you realize that you're reaching the end of those reserves, the price of gold will go up, right? And so that's Bitcoin. We talked a little bit about decentralization, right? And we talked about decentralization regarding the network. Well, this is decentralization regarding the currency too. There is no central bank. And this is why you find in the beginning, especially governments were coming out big against Bitcoin. Oh, we don't like Bitcoin. We don't like Bitcoin because they had no control over it, right? It's decentralized. They like a central currency. We can control it. We can control how much is released. We can go ahead and start taking currency out of the market. It is under our control of the central bank. Bitcoin is run by user demand, right? It is almost like a pure market, right? And so because of that, they couldn't figure out how to quite do the regulations on it. So what's the next best thing? Let's try and turn people's mind against it so that they'll ultimately leave it alone. Well, the opposite happened, and thanks to them constantly talking about it on the news, it made people who didn't even know about it before saying, what is this Bitcoin? And tutus, they're now into Bitcoin, right? Now, one of the other things that's been hotly debated is what is Bitcoin? How do you put that on your financial statement? How do you categorize? Why do you have Bitcoin, right? Many people said that, oh, it's just a trading asset. Many people were saying it's not an asset at all, right? Well, the general consensus now is it's a store of value, which goes in line with why they call it digital gold, right? It's that it is a store of value like gold. So you buy Bitcoin mostly to hold it for, you're going to hold it for about 4, 5, up to 10 years. And just essentially keep on putting money into it. And at the end of 10 years, it will be valued much higher, right? So, and that in to a certain extent has kind of been hurting it as being a viable currency, because the point of the dollars that's in your wallet is not necessarily for you to just hold it for the entire time. It's for you to circulate it around the economy. Now, Bitcoin, that's the battle there. And that's why some people are saying it's not really a currency because nobody really wants to use it. But I think it's kind of the whole situation of, okay, I'm going to give you Bitcoin today to buy this product, right? But then next year, Bitcoin is going to double. So how many times did I pay for that product, right? And so I think it's a situation where a lot of people who have Bitcoin are kind of saying, I would spend it, but then next year it's going to double and I'll have double the amount of money. So let me just wait until next year. So that's the thing with Bitcoin. So that's what Bitcoin is, okay? What is mining? You heard me talk about mining, and that is how you get Bitcoin and many of the other currencies. It is called mining. Once again, it tied into why they call it digital gold, right? You're mining it, right? Now, what is mining? Well, mining is where, as the picture shows, all of those are different servers, right? All of those are servers, all connected for one purpose, right? And this would just be a row of servers within a massive warehouse. Picture the size of a warehouse of something like the Amazon fulfillment centers, like a massive warehouse, just laid with servers and servers and servers and servers, all connected for one task. And that is to mine more cryptocurrency. That's it, just one task. just keep getting more cryptocurrency. That is mining, right? And the reason why they have to do this is because the processes to get cryptocurrency are usually extremely complex, that you have to kind of have like supercomputers to do it. To give you an example, in order for Bitcoin, you have to solve complex mathematical equations. Now, the less Bitcoin there is in the system, the harder the equations become. And therefore, the longer the computers have to work and the more processing power you need in order to solve the equations and release more Bitcoin, okay? So that is what mining is. Mining is just the computers coming together to do the task of getting more cryptocurrency. The reason why I'm not just saying just formula, because different cryptocurrencies can be mined in different ways. The most popular way is the way how Bitcoin did it, whereby you have to solve mathematical equations. But I'm not going to say that's the only way, because I don't know how every cryptocurrency is mined. And I don't want anybody to say, oh, well, you know, you have this, that, no. So I'm keeping it very simple in that regard. So it's the task, right? So that is mining. Mining is a whole lot of computers coming together to perform a single task of extracting more cryptocurrency. Now, as you can imagine, having all of those computers, what happens? It's draining a lot of power. To give you an idea, right? To give you an idea, leave on your computer for an entire week and look at your electricity bill. No, go ahead and put 10 computers inside your house. Leave them on for an entire week and watch your electricity bill. Now, imagine thousands and thousands of computers on 360 days a week, 24/7 running at max capacity, not sleep, no hibernation, running at max capacity. Now you can just imagine the amount of energy it is using. And so many people are saying with all of that energy that you're using up, you're doing more harm to the planet than what's needed to get one Bitcoin, right? Then the next, so as I said, in currencies like Bitcoin, it becomes increasingly harder to mine, and therefore it uses even more power, right? Now in China, right, this was one of the things that recently caused Bitcoin to dip. China essentially started kicking out the Bitcoin miners because of the amount of power that they were using to mine the currency. Now you have cities like Miami that's trying to attract them to come over, and they're now looking for more green energy solutions. But that that caused Bitcoin to tumble, and it created quite a bit of buzz to know that a country is kicking out the miners because of the amount of energy that they're using, right? So you can just imagine to get kicked out of a country, right? So next thing, does let me not fall into the whole Xerox thing, right? Does cryptocurrencies fund illegal activities? Yes. However, so does cash, right? So when they're saying, oh, people are buying drugs with Bitcoin, people are buying drugs with cash as well. So to me, that argument really doesn't hold up water, right? But the thing with Bitcoin is, for a long time, Bitcoin only stored transactions. Well, to this day, Bitcoin only stores transactions as a transaction number. There is nothing, it doesn't say Mary Jane transaction number. No, it just says transaction number. There is no IP address attached to it. There's no physical address attached to it. There's nothing but a transaction number, a date, and the amount. That's it, right? And so it was perfect for them to buy things on the underground because it was an untraceable currency. Yes, the ledger, the ledger posting, that block will be there forever. Yes. But that block does not contain any information that will lead to your identity, right? So what are they doing now? Well, what they're doing now is essentially saying, okay, if you want this cryptocurrency, you're going to have to provide us with some basic information. Let us get your name. Let us go ahead and get your address. Let's see your ID. That is purely from a regulatory stance. That has nothing to do with the cryptocurrency themselves. Cryptocurrency keeps transaction amount, date. It will show, oh, 123 sent 20 Bitcoin to 456 on this date. That's it. Who is 123? Who is 456? Nobody knows. So now they're going ahead and trying their best to attach names and faces to the 123 and the 456. So later on, they can cross-reference it. Okay. Now, why should you invest in cryptocurrency? Well, cryptocurrency is at some point in the future, if us millennials have anything to do with it, will be up there in the currency lane, right? Because we don't like the dollar, right? We want paper money to go away. That's the whole point of millennials, right? We don't want to walk with cash in our pocket. We want cards. We want to use our phone, watch. We want to use our phone. We want to use everything else but paper, right? So we're all embracing the cryptocurrency. The other thing is, if you get into cryptocurrency now, and so like, for instance, look at the people who went ahead and was in Bitcoin when Bitcoin was only going for like $8 or $100 per Bitcoin. Look at them now, right? When you go ahead and you're kind of like in the early phases of anything that you suspect is going to be big, you could come up with huge benefits on the back end. And that is what everybody is hoping for, is that they will, on the back end, they will have these huge benefits. So that is why now you hear them talking about other currencies apart from Bitcoin, because Bitcoin is already up there in price. So they're looking for currencies that's currently going for $1 per coin, hoping that that coin now will hit the big Bitcoin status and boom, right? So that is why I call it the tech boom syndrome, right? Everyone thinks of a Google. Everyone thinks of Facebook. All of these things that start off real early. And those who happen when it's early reap these big rewards later on. And so that is why everybody is surrounding the crypto world and embracing it so much. However, if you're going to invest in cryptocurrency, have a strong heart, okay? And don't invest your life savings. Don't even invest any money that you will cry if you lose, because cryptocurrency, because it's in its infancy, is extremely volatile. It can move up 100 points today and move down 150 points tomorrow. It's doing big swings. And so if you cannot handle the big swings, try and handle the big swings, okay? Try and handle the big swings, all right? But just don't put in anything that your heart can't take, okay? Now, is there other currencies apart from Bitcoin? Yes, there are other currencies apart from Bitcoin. The next most popular one is called Ethereum. Ethereum, Litecoin, Cardano, Polkadot. I know everyone talks about Dogecoin. There's a reason why I did not put Dogecoin on there, right? I am talking about the currencies that were not based on a joke and is not essentially riding the soul wave of what Elon Musk said, right? These cryptocurrencies actually are backed by other things than, oh, this is funny and oh, we just hope that it can pick up traction. They're actually backed on solid technology and those type of things. And so that is why I listed them there. There's others out there. There's others that are cheaper. There's others that are just coming out and all of those things. And so really take some time, read what they're about, look into them, right? See if there's one that interests you. And if it's small enough, then maybe you can invest in them. But definitely look at others apart from only Bitcoin. Okay. Where can Bitcoin and all of these be purchased? Usually you can buy them straight from bitcoin.com, right? You can also buy them through PayPal. But most people use what they call exchanges because they tend to have a wider range of cryptocurrencies like Coinbase, Binance. Those are the two major exchanges. There are others out there, but I haven't looked into any of the others to really be able to put it up. And next thing I think that I'm endorsing it, right? I only really know about Coinbase and Binance. And I know you can get it from PayPal, and I've gone to bitcoin.com and seen that you can buy it straight from there. So you can buy cryptocurrency straight. Okay, so we're about to wrap up, but that's really what cryptocurrency is, right? If you take away all of the technical jargon and all that, the main thing, it is a virtual currency built on blockchain. You get new from it being mined. There's more cryptocurrencies than just Bitcoin. Most people, if they're not trading it, using it as a store of value, you can get it from either bitcoin.com, paypal.com. You can go to exchanges like Coinbase or Binance, and you can go in, you can purchase. If it's moving the way how you don't want, you can sell it, you can purchase another one, you can treat it like a regular investment. Okay, so just once again, do your research with all of these. Read most of them have white papers that will tell you what they're about. Look on websites, look on forums, see what other people are saying about it. Like with anything, there are scammers out there, and you don't want to get sucked in by any of those. That's another reason why I said don't put any money in there that you're not willing to lose. Okay? So thank you guys for coming on. We will meet again next week. You can look for this video as well as the past videos that we've done on my YouTube channel. This one will be released this Sunday at 8 a.m. The others are already out there, so you guys can go ahead, check on it. I know I have a tendency to talk kind of fast sometimes, so you guys can go rewind and really get the information. And if you want, you can go ahead, comment. I'll see all of the comments, and you can make suggestions as to any videos that you guys would like for me to do, or any topics that you would like for me to talk about, and we'll take it from there. All right. Thank you, guys.